Good day, everyone. I am Michelle Joy E. Sustento Pabilona, and I will be discussing the difference between feasibility study and business plan. If you are contemplating launching a business, you will need both a feasibility analysis and a business plan. Both documents must be the result of extensive research and critical thought, and they must be presented in ways that others can comprehend. Thus, you may show your proposal to both those whose opinions you value and others you hope would invest in it. So before beginning, it is essential to identify and differentiate between a feasibility study and a business strategy. Consider the parallels. Comparing the similarities between a feasibility study and a business plan is important because both are used in different ways to help you create a profitable business. Similarities between the two documents include timing. Both are initially done before the business opens and can be conducted again later to determine the next steps on future ideas. Input. Both include input from several individuals or departments that have different skills. Format. Both include other documents that are pulled together in order to compose the report. Components. Some of the issues analyzed are similar, including examining the target market, market conditions, and financial costs. Usage. Both help the organization's management make decisions and can also be shown to potential investors. Recognize the distinctions. It is crucial to grasp the distinction between a feasibility study and a business plan. They differ, and one cannot be substituted for the other. Exceptions include the purpose of feasibility studies is to determine whether or not to proceed with a business idea, whereas business plans are created after the decision to proceed has been made. Methodology. Essentially, feasibility studies are research initiatives, while business plans are future estimates. Risks. Feasibility studies list the risks of an idea, while business plans explain how the management will deal with those risks to make a profit. And costs. Feasibility studies may necessitate the hiring of outside experts to perform exhaustive investigations, whereas business plans are created by employees as part of their duties. While it may seem that the feasibility study is similar in many ways to the business plan, it is important to keep in mind that the feasibility study is developed prior to the venture. So a feasibility study can readily be converted to a business plan. The business plan should be viewed in terms of growth and sustainability, while the feasibility study should be viewed in terms of idea viability. The feasibility study helps determine whether an idea or business is a viable option. The business plan is developed after the business opportunity is created. Carrying out a feasibility study. If you are conducting the feasibility research on your own, undertake a thorough competition analysis, taking into account the following. Is there a requirement or desire for your product or service? Is there an unmet need or room for another product? Who would purchase your product and where would they be? Can you deliver to their address? Is the market saturated or is there opportunity for or demand for other products? What do current consumers pay for comparable products? How much do you need to charge to be profitable, and will customers pay that price? What are the dangers associated with your suggestion? Probability of success. Can you feasibly overcome the dangers in order to generate profits? Included in a good feasibility study outline are the following. Introduction, product or service, technology, market environment, competition, industry, business model, market and sales strategy, production operations requirements, management and personnel requirements, regulations and environmental issues, critical risk factors, financial predictions including balance sheet, income statement, cash flow statement, break-even analysis and capital requirements, and conclusion. Business plan writing. Writing a business strategy may be difficult, but if you approach it methodically, you will be successful. The Small Business Administration recommends the following components for business plans. Include a goal statement, a list of your products and/or services, a short description of your business's leadership team and key employees, and the location of your business. To entice investors, include current financial data and growth estimates. Company description. Describe the problems your business solves, its target market, its competitive advantages compared to the competition, and anything else that makes your company better than others, such as product awards or recognition, significant sales growth, etc. Market research. Conduct competitive analysis to determine what other firms are doing, their strengths and limitations, and how and why your business will be competitive and successful in the marketplace. Include an organizational chart that shows management levels, departments, etc., as well as the legal structure of your business, such as a corporation or partnership. Specify your service or product offerings and highlight their benefits. Describe any research conducted, patent filed, etc. Marketing and sales. Describe your marketing strategy and sales tactics in detail. If you need to, explain how much money you will need over the next 5 years, what you will do with the money, and the terms you are asking for. This is the financial outlook for the company over the next 5 years. If the business operational, provide current financial statements. This section has things like resumes, photos of the product, letters of recommendation, patents, and licenses that are needed or requested. A feasibility study is distinct from a business strategy. Prior to the business strategy, a feasibility analysis would be conducted. A feasibility study is conducted to determine the practicability and profitability of a business initiative. Prior to investing in a new company initiative, a feasibility study is conducted to determine whether the time, effort, and resources will be worthwhile. While the feasibility study may appear to be similar to the business plan in many aspects, it is vital to remember that the feasibility study is created prior to the endeavor. A feasibility study is easily convertible into a business plan. End of presentation. Thank you so much.